Hey everyone, welcome to another episode of the Adventures of a Real Estate Investor. I'm Susie.
And I'm Michael, and we're excited you joined us for this adventure.
So today we have two guests and we are super excited. So today we have Daisy Serrano and Luc D'Abreau, and we are so excited to have you guys on today.
Yeah, thanks for having us both on here. Looking forward to it. And yeah, hopefully your listeners get a lot of value out of hearing us chat about our experiences.
No, yeah, absolutely. And it's cool because you don't really see a lot of other couples in this space. So Michael and I were really excited to have you two on from that aspect. But even just to let the listeners know, so we have had Yona Weiss on before, which is really cool. And it ties all in because Yona does the 10-day CRE challenge that we have discussed. And that's actually where Michael and I met Luc and then met Daisy. And so we were really excited that Yona in that sense could bring us together.
Yeah, that's the thing. I mean, I would say he's a pretty big connector. That's really a big part of who he is. And so, yeah, it's cool to have it kind of, I don't know, it's coming full circle now.
Yeah, and I would add that, it's awesome to be able to meet you guys and to get to know your story, even though we're halfway across the world. So I think through social media and just so many platforms now, we're able to build those relationships, even though, we're so far away. So thank you for having us on. We're excited to be here.
Yeah, absolutely. And just to piggyback on what Susie was saying, there's not a lot of couples doing it in this space, right? So there's maybe 6 couples that I can count, right? Almost on one hand, and so it's great. Just being, it brings us all a little bit closer together, right? Because we're all in this together. So it's great. Luc and Daisy, would you mind just sharing a little bit about, your background and why you started investing in real estate?
Yeah, so I was born and raised in Southern California, ended up going to school, went to school for engineering and got out, started working. I kind of had been exposed to real estate in one way or another growing up, but really probably the most impactful thing that kind of pushed me towards specifically doing real estate was reading Rich Dad Poor Dad. Once I finished grad school, when I got out when I was 23 and I started working, I was looking around and thinking, okay, this isn't going to work for 40 years. I'm not going to be able to do this, And so kind of was dabbling and figuring out how to get involved, but ultimately ended up being able to do so passively in 2 deals several years ago. I guess it was about 3 years ago now. 2 deals here in Texas, down in San Antonio. And then from there, we ended up we ended up realizing that we wanted to be able to make more progress. And so, I should back up and say that we invested in those deals together. Wanted to be able to make more progress, and hence the move out here and getting on the active side and being GPs. And so, moving from California to Texas ultimately, and being here and making more progress in that way. So I know I kind of collapsed a lot of stuff down. There's a lot of more that went on, of course, but that's kind of the broad overview of kind of my experience and my journey within real estate.
Yeah, and mine has been a little bit different, but definitely overlaps with Luc's towards the latter part. He was really the one that brought real estate into my life, and I was very opposed to it at first. I was not interested. I was just bored. So many numbers, so many databases and spreadsheets. And my background has been in international education and counseling the last 10 years, working with international students studying in the US from all over the world. And, it was really once, Luc and I started dating, he started talking about real estate. I started going to meetups with him, learning, about the process, about the industry, and really found my tribe in a women's group out in LA when we lived in that area. And just, once I found my tribe, I found other, badass women that were doing pretty impressive things, right? And just being in the same space, in the same room with them, I thought, I could do this too, right? It's very accessible. And so yeah, that's sort of, changed the trajectory in terms of my professional background. And, we pivoted. Once we moved out to Austin, I was able to transition out of my W-2, and now I'm full-time within, the multifamily space, and now just hitting the ground running, being boots on the ground here in Austin, and, closing on our first property here, and now looking for the next one, and building our life and our future children's life, and, our family around the business now. So it's all integrated. People ask us, how do you separate? And it's all integrated for us. So we'd love to dive a little bit deeper into any of those aspects that stand out to you.
And that is incredible. So yeah, there's a lot that I want to kind of dial back and unpack a little bit. So first off, just for our listeners, So Luke and Daisy, they methodically like thought out exactly where they wanted to invest, and then like made a move to that area where they wanted to invest. And from what I understand, correct?
Yeah, that's correct.
And so like Luke, so Daisy, you transitioned to W-2. We'll get to that in a second. But Luke, were you able to find like a job, or are you working remotely, or how that worked? Were you looking for a job in Texas while you're in California, or how'd that work?
Yeah, so because we had passively invested in Texas already, we knew that we were going to be living in Texas. We already knew that that's what we were going to do, and it's going to be somewhere central Texas. So if anyone's familiar, along I-35, either between San Antonio, Austin, or Dallas, like it was going to be somewhere that we'd end up landing. And for the previous jobs that I have had, they've all been in the construction industry, and so those other jobs that I had I wouldn't be able to do remotely. So I went through a bunch of application processes, and actually at the end of 2019, we almost moved out here to Austin, and for a job that I was looking at, but it feels like a blessing that I didn't end up going through with that ultimately, because even though I'd rather ultimately just be working on Make It Rain full time, of course, the current work that I do as like a W-2, it's very engaging, and it's something that I can sink my teeth into, or else for me, I know how I am, I'm going to get bored, and it's not going to work out long term. And now just being able, I guess, to add a responsibility for myself of supporting both of us and our living expenses is important, to make sure like, okay, what I'm doing full time is something I'm engaged in, something that will make sure that it has enough income. So that way Daisy's able to do what she needs to do. And then in my free time, the extra 15, 20 hours a week, I'm still able to work on Make It Rain as well. So long answer to a short question, but the short answer is I ended up finding a job here, and we moved here.
No, yeah, that's great. And thanks for like explaining that, and especially to go like back to Daisy's part. So how was the transition into leaving a W-2? Because I know like a big part of like a person's identity is having like a job, a regular 9 to 5. So how was that transition into real estate full time?
Yeah, that's a great question, Susie. And I think for us, we'd been preparing for that for so long that it was very easy, actually, in terms of making that transition. We'd been, as Luke mentioned, we'd been investing in Central Texas for about 3 years. For about a year and a half, we started talking about, okay, making the move to Texas. And the idea came from Luke, and I was completely hesitant, as other parts of our story are, because my family's all in California, right? And so I think once we started talking about those long-term plans and just, creating a vision for our family and where we wanted to be and the kind of life that we wanted to create for our children, it made sense, right? This was the right step to take. And so once we were able to see that together and work on that plan together as a couple, we weren't even married at the time. We were still engaged. And so once we came, to that conclusion that that was what we were going to do, then, we started preparing our family, right, for the move, just mentally, right? Like, oh, Texas is amazing, or there's a lot of opportunity, whatever the case was. And then I, in my W-2 job, I worked for the consulate of Kuwait prior to moving out here. And I was very close. I had very close relationships with both of my directors. And so they all knew of the plan, right? They were very supportive. They knew that, Luke and I were planning to make this transition. And, I wanted to prepare and do as much as I could for them before leaving that position. And so part of that came with, letting them know of our move and of our plans. So I think because we had planned it for about a year to a year and a half, and, my employer was aware, we'd been looking at, okay, what would that look like, right? In terms of income, in terms of, all these different things that needed to line up. By the time the actual move came, we were ready. We were excited. We'd just been planning, it for so long. And so it was, okay, let's fit as much as we can into both of our cars and leave the rest behind, and we'll figure it out once we get there. So that's where it happened.
Yeah, that's cool. That's great. So Daisy, I want to ask you another question real quick. So you had mentioned, when Luke first brought you the idea of like real estate investing, you were kind of, weren't that into it. Like, and then you said you started going to meetups and things like that, and then met like a tribe of women and stuff like that, and really met your people there. Other than that, like, what was the other factor that made you really believe in like real estate? Like, man, this is awesome. We are going to uproot where we're living to move to another place. I'm going to leave my actual W-2 and do this full time now. Like, what was the driving factor behind that for you?
There were two things for me. I think, once Luke and I were able to get really clear on the opportunities and the kind of access that we were able to create for our family, for my own community, right? I'm Mexican American. And so creating more opportunities for more Latinos to invest is really, really important and really dear to my heart. And being able to retire my parents has always been a goal of mine, even from before. And working in education, unfortunately, there wasn't a way financially to be able to accomplish that, right? In the the industry that I was in specifically. And so in multifamily, I really saw the opportunity to be able to help retire my parents, to help more people in my community invest and create generational wealth, right? That the impact aspect of it really for me resonated a lot because I had a very different idea of real estate before I, was in the space. And once I learned more about it, met people like you both, like so many other people that we met in the industry that were just so helpful and willing to, answer questions and jump on a call with us. And I really enjoyed that community aspect, right? So that was one end. And then I would say the other side with really being very proactive on creating more access for millennials to invest and seeing more of that impact within our generation, right? Where when we started going to meetups and doing virtual events and in-person conferences, we didn't see as many young people, and we thought there's an issue here, right? There's a problem. There needs to be more opportunity for more millennials, more people like us to be able to invest and have that the just the access, right? And so that was really the other side of it, to where I saw that there was a very purpose driven mission to the work that we were doing. And so combining that with what I wanted to do for my family, it just kind of all came together.
No, yeah, and that's the whole point, I guess, for us, right? Is to like find that passion and have that purpose driven like vibe, I guess, going forward, because that's really how you would accomplish it all, right? Like that's how you get up, that's how you put in the extra hours, it's how it all works. So I do have a question off of what you said. So like for me personally, when I first like understood real estate investing, I thought it was like fix and flipping or like house hacking, like those were the main ones. So like for apartment syndications, I literally just thought, well, actually, I didn't even think of it as apartment syndication. I just thought of it as like rich people buying apartments, and that's who owned them all. So can you explain to me like what you thought it was? Like both of you, I'd love to know, because like Luke, I know you were into it before, but like what was your idea of multi-family, I guess, investing before you had really dove into it?
Wow. Yeah, I think so. Where my head always went was sort of like the 2, 3, 4 unit space a lot, which I guess it's technically multifamily, but it's not really commercial. It's more so residential. So my head was around that. And then the first exposure I really got to multifamily was a syndication itself. I honestly didn't think about where all the equity laid. I don't know what the past tense is, where all the equity was, within a multifamily property, and what the ownership structure was. I never really thought about that. And so my first exposure to it was syndication itself. Yeah. And then if it was smaller stuff, 2, 3, 4 units, et cetera, then it was really having an individual or 1 or 2 partners who owned all of that equity and who were the owners on those. So that was, I would say that was my sort of thought process early on around it.
And what about you, Daisy?
Yeah, for me, it was really around the single family space, right? I didn't know anybody who, invested in multifamily, who was involved, who even knew, right, what it was, multifamily syndication. And so for me, it was really at first, my perception of it was just, it's real estate, right? It's all sort of in this like real estate bucket, and that's it. And then, once I learned about syndication, the beauty for me is once I learned about syndication, it made sense because there's this concept in, the Latino community. It's called a cundina. And what it is, it's, multiple people in a community, let's say there's 10 different people, right, that come together, they pool their money, and you pull a number, everybody pulls a number, right? So if you get number 1, the first month, you get that bulk amount. And every month you're paying into this like community banking system where, one person organizes it, everybody pays monthly. If you get number 2 on that, then the second month you get the bulk amount. And it's a way for people that don't have, right, a lot of money, a lot of access, maybe don't even have access to banking to be able to get a big a bulk of money. And my mom always did that growing up. And so once I realized like, oh, this is that, but to a much larger scale. And it just made sense in my head because I had been exposed to that. And that's how my mom, helped build my grandma's house in Mexico. And that's how she like did so many things, right? And so it just made sense where I was like, oh, it's exactly what's happening, only on a much larger scale. But the concept of pulling money together to accomplish more as a community or as a group had been in my life since I was born practically.
No, that's super cool. Actually, like I've never heard of that. Like that's actually really awesome, right? To know that like in different communities, they're doing it as well, but like in different ways, But even with that, like because you two are focusing on millennials, what do you usually hear from them? Like when you first are talking to them, like what do they think of apartment investing? Because like for me, for example, like yes, I have some friends that like make a nice change of money, but then I have the other friends who don't make very much money every year. And so even when I explain it to them, it's a very scary concept, because they are still like in the scarcity mindset where like if their money disappears, who knows if it'll come back. So like what are you hearing most often?
Yeah, a lot of it is people don't even know that something like this exists. That's a big part of it, I would say. Like they don't this is what happens in the public markets. It's just that people don't end up thinking about it. It's like when people like a public company like a Tesla, right? Or a REIT, let's just use a REIT, right? Well, you have all these individuals who are putting in money. It's just that you don't have a minimum amount necessarily. It's not a private placement, it's a public placement. But people don't think about it in the same way, even though generally speaking, it's the same concept. But a lot of times what I'm hearing is like people, they just don't even understand that something like this exists or that they can get involved in real estate in this way. And so I would say that's a big piece of it for sure. And I would say when they do end up investing, like there's a certain amount of power that they do feel, like an empowerment maybe is a better word, when they're like, hey, I can actually get involved and I can be able to own a piece of real estate, because it's one of those things where I feel like so many of us end up realizing that real estate is an excellent vehicle to build wealth, but we just don't know how to do it, what to do. And like Daisy said, a lot of times it's like starting out single family. It's like, oh, I might just own a couple houses and like I get the rent. It's like, you can do that, like that works, but there are these other opportunities that are there too.
Yeah, I would say on my end, it feels very risky to a lot of people, right? And it makes sense because I think there's inherent risk when you don't have a foundation, a basic understanding of what it is. And so we always, try to advocate for education, right? Podcasts, books, talking to people that are doing it, because once you start to understand, there's always going to be risk, of course, right? It's an investment, but I think the more you understand, the more you're able to lower that risk profile. So I think the idea of risk, or, my family invested in something and then they lost all their money. There's sometimes that fear as well that I hear a lot, it was maybe like somebody that they knew, that they trusted, and, their money went away. Or, I think there's a lot of fear around it when they start looking at the numbers, or even, at the minimum investment. And I completely relate and I completely understand. The first time we invested, for one, I'd never saved that much money in my life. To be able to invest in multifamily. And so one, saving that money was a huge just stepping stone for me, because I had a goal, right? I had a plan at that point. I'd never had a goal before. And then two, I remember sending that, that wire and feeling very nervous, right? You send in your money and then you're like, I hope distributions start when they say they're going to start. And, once distributions started coming in, then you can kind of like release that breath out, right? And you're like, okay, this is working. But that first time, it's very, very scary. So I think just me having felt that, I'm able to like walk people through, like, this is normal. Like, it's good for you to feel, this way, because if you're investing maybe $10, you're not going to do as much, back end work and homework. But if you're investing 50,000, you're probably going to, take time to get to know the sponsors and the market and the deal, and, really understand what you're putting your money into.
No, yeah, absolutely. And to elaborate on something that you said was, the education piece is huge, right? For a lot of people. And I think that's very true, especially for millennials. Like a lot of, especially they don't have a lot of exposure to these investment opportunities, right? And so throughout their entire lifetime. Usually when you get older, then you have enough money accumulated most of the time to then start looking for alternative investments in outside the stock market, which ends up being real estate or some other kind of hard assets, right? So with that, like, because I've had friends who are like millennials and things like that, like ask me like, well, I'm just like throwing money away at your company, right? Like, no, like we're providing opportunities for you to invest with us, and then your money doesn't go anywhere. It's like there, and then you make distribution, or you get distributions from it and like returns from it. And so that's a big thing. Like they don't understand how investments actually work, because all they think about is like the stock market. And that's because that's what everybody, I mean, Wall Street does a really good job at like they're smearing the I don't want to talk too much about it, but trying to get everybody to invest in Wall Street versus other alternative assets. But yeah, so education is definitely huge. And I'm trying to think what other things that people have said to me. Yeah, they just basically just don't understand the whole investment structure. And so do you find, sorry, go ahead. Do you find that as well? Like you have to really break it down to them as you're onboarding these potential investors?
It kind of depends on where they are in their investment journey, I would say. I mean, some people, they've never even heard of syndication, so it's a matter of understanding that. But then other people, they're more well versed and they've invested in themselves. Like they can dig into understanding like the terms of the loan and being able to manage the risk that way, for instance. So it's kind of, people are at different places, but I would say generally speaking, the way I kind of try to just simplify and bullet point it is like it's a fix and flip, because we do a lot of value add, whether it's operational or like actually like a CapEx value add. It's like we're doing a value add. It's on a multifamily apartment instead of, we're doing a fix and flip essentially on multifamily as opposed to a single family. Like that's essentially what we're doing here. And there's a lot more to it. Of course, there's a lot of intricacies of it, but I think people understand that piece, and the fact that we're able to like be able to charge more for rents, and what we keep, we're able to give back to you, it ends up working that way when there's that cash flow.
Yeah. And we always talk about our experience, right? We say, this is what's worked for us. Like whenever I'm talking to investors, I'll say, there's a really big thing in the millennial, community population is, right, college debt is huge. And, I've shared my story, right, of I still have college debt. And if I wait to pay off all my loans, I'm not going to invest until I'm, well into, my 60s or 70s, who knows, right? And so, I've made that choice to invest now. And, the return that I'm getting from my investments is higher than the interest I'm paying for my loans. And so there's that differential, right? That difference. And so for me, it makes more sense now to start, getting equity, right? Investing my capital, and ultimately I'm getting more from the distributions than what I'm paying for my loans. So I don't have to wait, right? But some people choose to wait and pay off all their loans first. And that's perfectly okay. I think it's just, there's so many ways to do it, right? There's so many ways to skin the cat. And I always ask, like, what's the end goal? Right? And work your way backwards. Because if your end goal is, you don't care about that difference, right? That return right now, but it's just not having debt, then yes, what you're doing is perfectly aligned with that. So I think it really comes down to aligning, like what's that end goal or end goals, and then working your way backwards as to how you can get there.
Yeah. And I would end up adding to that too. I mean, I end up thinking about the opportunity cost of, if we hadn't had invested 4 years ago, we would not be talking to you right now. Like there's absolutely no way it would have happened. Well, most likely it wouldn't have happened. We wouldn't be living in Austin. We wouldn't be, general partners now. There's so many things that wouldn't have happened too. So it's like, well, what is, you can look at numbers, but then also you have to like kind of look holistically at, well, if I'm going to do this, then how is this going to be able to move me forward in these other ways of my life? I'm good at looking at the numbers, of course. And so I agree with what Daisy's saying, but then there's all these other aspects to end up considering as well. And it's not that would work for everybody, but it's just what's worked for us.
No, yeah. And that's great. And something else that you like touched on. So like, I totally understand the student loans part, right? Like even for us being in investing, like there are times where I'm like, hey, like, why don't we just use like, I guess this amount of money that we just got and pay my student loans. Michael's like, hold on, we have to, be LPs. And then the monthly distribution is what'll pay it off. So, I mean, even sometimes, right? Like sometimes I think one way, just because I'm like, okay, cool, I'm excited. We can like put a pretty big dent in this horrible debt. And then the other times, just because like my I don't want to say lack of patience, but that's kind of what it is in this instance where Michael goes to like, hold on, let's take it like one step back. But even like beyond student debt, like you talked about generational wealth. And so Michael and I also think about generational wealth, even though we don't have children. So like, how do you have that conversation with the millennials who also don't have children? Like, do you see a lot of people being like, okay, like I understand this forward thinking, or do you see that like they need the education part first before they can even get to thinking about generational wealth?
Yeah, I think for a lot of people that we talk to that, maybe aren't, married or with children, it's really focusing it on what, what matters to them, right? I think for a lot of millennials, it's experiences, right? It's being able to travel and, to have certain experiences in life and not be, tied to a 9 to 5 and be able to work from home and have that flexibility, right? And so for us, I think it really comes down to the generational wealth aspect, that needs to come from the individual, right? If that's a goal of theirs and something that's important to them. But if it's not, it's what is important to you and how can, this opportunity, right? This investment, this space, this community help you get there. And so it's, do you want to be able to retire at 40 instead of, 65 or 67? Or, do you want to have the flexibility to, travel and live from anywhere and be able to, work remotely? And I think it really comes down to that individual's values and what matters most to them. And then, from there, then a lot of people ultimately in the space, I think you get to the generational wealth building aspect, just because it's such a big benefit, right? And I think we all get there eventually, but people get there at different times, and it's just being a resource along that process as much as possible. So if and when people do get there, then you're able to help more on that end as well.
No, absolutely. And something I want to touch on is like retiring early, right? So like Michael and I are huge on that because we believe there's a problem in the US where like we are expected to work until we're 65 and then retire. And that's supposedly when we're supposed to enjoy life, which makes no sense, right? That kind of feels like we're doing it backwards. And so I love that you touch on that as well, just because it is huge, right? Like we want to be able to have experiences and like explore this beautiful world. Like there's so much more to it than like this W-2 cubicle that we are stuck in majority of the day.
Yeah. Well, I feel like, to get into the education system in the US, like K through 12, that we're taught to be employees. Of course, this isn't a new concept. I mean, Kiyosaki and so many others have talked about it so many times, but that's kind of where that tunnel vision ends up coming from. And that's what we're taught. And so that's what ends up happening. That manifests as people are, that happens the first 20 years of their life. And then the next 40, you end up living that out, So, I mean, I completely agree. It is a problem. I don't think that the work is a problem, but it's like, are you working on the right thing?
Right.
You know what I mean? You're building somebody else's dream for them, which is cool. If that's what you want to do, like that's your goal, like that's good. Like those people are necessary and they are needed, and those people add a lot of value. But if you want to build your own dream, then you should do that,
Yeah, and I just want to highlight, Luke mentioned the educational space, and I worked in education, right, the last 10 years before transitioning into real estate, and the educational system in the U.S. unfortunately was founded on creating factory workers, right, when we were going through the industrial period. And so of course it's no accident, right, that there's bells in class, that there's a certain schedule to follow, because it was created for the purpose of creating good factory workers. And so once you kind of take a step back in that way and look at the educational system in that way, it makes sense, right? The flow of what we're taught, to go to school, to get a good job, to work for somebody else. And I think once that veil kind of gets removed, you see, things in a very different light. But, the fact that it is based on that concept, I think makes sense once you're able to just, be outside of that space, or, your goal is to not be part of that process for the rest of your life.
Yeah, that's pretty wild. I never envisioned that before, like where the bell between classes and school and stuff like that would be like shift work at a factory. But it makes total sense. That's crazy. So it blew my mind. Thank you. But unfortunately, we're getting towards the end of the show, which brings us to the Adventurous Four. And these are 4 exploratory questions we ask every guest. So the first question is, where is one place you wish to travel and why?
Ooh, I'm gonna say two places. And that's because we got married in October. We're recording this in May of 2021. We got married in October of 2020, and we haven't been able to take our honeymoon. But on the list for us is Ethiopia and Dubai. Ethiopia, because we are coffee lovers, coffee enthusiasts, I would even add. Luke says he's a coffee snob. So we want to go to the origin and see, where coffee comes from, see the coffee farms and how it's processed and all of that good stuff. And then Dubai, I'll let you talk about Dubai.
Oh yeah. I mean, because Ethiopia is so close to Dubai, I was thinking, well, if we're there, we might as well see one side of things and then the other side of things, right? And so I've always wanted to go to Dubai, and so that's something else that's on the list for us. I mean, I'd be down to go almost anywhere, just experience a different culture. I feel like, especially going over to the other side of the world, once you get to Africa and Asia, it's so different, just culturally. So I would almost be down to go anywhere.
That's really cool.
Thank you. So the second question is, what is the number one thing on your bucket list, and how are you leveraging real estate investing to achieve it?
Yeah, bucket list. A big thing for me is doing Make It Rain full time. Like I said before, I mean, I'm very engaged with what I do for work now, but nobody's going to take care of your baby better than you. That's just the reality of the way things work. And so I'd rather take care of my baby than somebody else's right now. And so that's of course, that's something on my bucket list, and leveraging real estate actively right now in order to be able to do that and accomplish that. And hopefully it happens within the next several years. And that's the plan. And we're just, working towards that.
Nice. I was going to ask, do you have a date in mind?
I guess it would be we haven't written down the actual date, but it would be 3 years from now is what we're on target for.
Awesome. Cool.
That is awesome.
Next question is, what is one piece of advice for someone who wants to start passively investing in real estate?
Ooh, I would say reach out to people, right? I think you get to a certain plateau with education and podcasts and books and all of that good stuff. But I think just once you start having that conversation with a human, right, that, is real and, you can relate to, it just makes it so much more real. So my recommendation would be reach out, right? Call Michael, call Susie, reach out to Luke, to myself, right? Just if you hear somebody's story, on a podcast or anywhere and it resonates, reach out. Like, we're all, in this together. And I think we're all happy to help as much as we can. So yeah, just pick up the phone or send an email or send an IG, right? DM, something, but touch base personally.
Yeah. And I would say, focus on the jockey more so than the horse, like the deals, generally speaking, the deals are all kind of the same, or else they don't end up getting out to market, just generally where the returns are. But if people believe in who you are, like if they believe in you, Susie, and believe in you, Michael, and they resonate with you, then that ends up, I think then that's a good first step to end up going that way. And so look at who's running the deal and look at who the team is and whether or not your values are aligned, like your own personal values are aligned with who that person is and who you have, if you have rapport with them, and then, take things from there.
Yeah, absolutely. And then the final question is, if you had unlimited resources available to you, how would you leave an impact?
I can start on this one.
Yeah.
Mine would be in education, right? I've been in the space for so long, and I've seen the power of education. I've seen, my parents who were immigrants from Mexico came here with nothing, and they emphasize education. And, now all of their children are in a much better place, right? Personally, financially, spiritually, in so many ways. And so I've just seen the power of education and what it can do for a young child or, even adults, right? Going into college and having that post-secondary experience. And so I would, put it all into education. I think you just can't go wrong, right? And empowering others and making it an educational space that's very focused on end goals, on impact, on a bigger picture, not just, going to school for the sake of school, but what is the purpose of it, right? Making it a very purpose-driven educational system that helps empower people and get them to the next level and believe in themselves.
Yeah, and my head goes two places. I mean, one for me, it would be building a business. That's a big thing, because I feel like us as individuals, like we need something to focus on and something to do that's going to be it's going to be bigger and greater than who we are, right? That's kind of just my own personal belief. And with that, I think comes mentorship as well. Being able, me and Daisy were talking about this a few days ago. Like people want to give back, right? We don't know everything, but if we see a kid who's like 15, it's like we can make a huge impact and potentially change the trajectory of their life. And so doing that, with unlimited resources, doing more and more mentorship would be something that would definitely be on the top of my list.
That's great. Yeah, I love that. So before we end the show, can you share with our listeners how they can get a hold of you and tell them a little about your podcast as well, please?
Yeah, you can reach us at makeitraincapital.com. There is our Instagram, our LinkedIn, all of our social media accounts, and just we'll make it nice and simple. Makeitraincapital.com. And then, in terms of the podcast, we started it over a year ago, and it's just been amazing. We really focus on providing more access and education for millennials to invest in multifamily, and whether they invest with us or with you guys or with anybody, right? It's just creating that foundation and understanding what multifamily syndication is, right? What are those different things to know and understand within the industry? And then two, just bringing on awesome guests like yourselves, right? And you'll be guests on our show here pretty soon as well. So just bringing other people on to share their story and, somebody that, other millennials can relate to or learn from, and just see the possibilities, right? And feel that those are real. It's not just somebody on the other side. It's somebody who looks like you, who sounds like you, who maybe has a similar experience. So it's just being able to provide that platform for people to get education, but also relate and just give them that push that they might need to be able to take the next step.
No, yeah, and that's great. And thanks for adding that end part where like when they look like you, sound like you, act like you, like that's a huge thing too. I mean, even you said at the beginning, like joining that women's group in LA was like a huge like eye opener for you. And same with me. Like I had joined a women's conference and I was like, wow, there's so many of us. This is cool. So no, I totally understand that. But thank you, Luke and Daisy, so much for being on the show. We are super excited to be on yours here in a few weeks. But it was a pleasure having you two on.
Yeah, thanks, Susie. Thanks, Michael. Appreciate the time, the opportunity, and looking forward to having you all on our show soon.
Yeah, absolutely. So until next time, explore more, adventure awaits.
Woo!